Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Wednesday, March the 15th, 2017. Today is FOMC. A lot of economic news today. We just actually went through the news. Just before we get going, let's get the disclaimer out of the way. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in the live go-to session to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our trade plan, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place for whatever the market throws at us. We do not know what the market's going to do. We can simply prepare a plan, then determine what the market is doing once it opens up, and then find the plan that best suits what the market is doing and execute on it. This is a subscription room, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. We do everything live here in the go-to during the pre-market and then live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, quickly, let's go right to the news because that's the big thing today. Oh, did I just close it out? Sorry, I did. All right, so we had 8:30, we had CPI, core retail sales, and retail sales. Basically, they all were a slight beat or a hit. So the news was relatively good. The only one that was not a beat was retail sales, but not really anything to worry about. 10 o'clock, we've got business inventories and NAHB housing markets index. But the next big one will be crude inventories at 10:30, and of course, everything's going to be waiting for the FOMC statement and the federal funds rate. Also, this is a press conference, so Yellen will be speaking 30 minutes after. Now, it's also debt ceiling today, so I'm not sure how they're going to handle it. And we've got the Dutch elections. I'm not sure if the results are out yet on the Dutch elections. And then into the evening, we've got more news coming out of Australia, unemployment coming out of there. And then tomorrow, we've got building permits, Philly Fed, and unemployment claims. So we get a fair amount of news today and tomorrow. But the big one will be, of course, the FOMC announcement and whether or not. I don't think there's any doubt that we're going to get a rate increase. It's just a matter of whether or not it's going to be more about the language, and whether or not they're gearing in for 3 or 4 rate hikes. And it'll be interesting if they have a larger increase today than expected. Just taking a look at the macro to micro real quickly. I mean, everything is pretty much still long-term, in an upward trend. I use a simple candlestick chart with a 9 EMA, 20 SMA, looking for slope of separation, where it's being challenged or violated. You can see monthly was beautiful, challenged at the beginning, end of 15, beginning of 16, and then we get this beautiful continuation. We have an all-time high in the March contract at 24.01, adjusted to 23.98 in the June contract. On the weekly, beautiful trend. We did violate the one-time framing up on the weekly. We had 5-6 weeks of one-time framing. Last week we violated. So far we're inside of last week. A close to the technical gap right now against the 9 will bring us down to 23.36 area. Going to the daily, you can see that let's get rid of this, shall we? We've come down and we're getting a MA hug or MA squeeze right here. We've lost slope and separation, so we are at a decision point. Obviously, the decision point is going to be the Fed news. I doubt we're going to get any major moves until we get into the FOMC this afternoon, but the trend is weakening and being challenged right now on the daily. On the intraday, you see that we had that downward trend over multiple sessions, and then we've been in consolidation. There is a trend line you should be paying attention to here. Okay, a break above there could get us a move to test these fractals highs here at the 76.25, and then above that, I'd be looking for a move back up into the 80s. Going to the 1 hour, you can see that we're in an upward trend right now. There is a naked cross to pay attention to, so any move below the 67 area, I'd be looking in for a rotation back down into the 64, especially if we don't hold that 65.25. Going to the 30-minute, we've had this nice upward trend all night, just very much stair-stepping up until we got into this morning and the news out of Great Britain and their unemployment, and then we came back down and tested the 20 SMA, but we bounced off of it, and we're looking to see a possible continuation pattern. On the 15-minute, basically the same thing. You got a pretty decent trend coming into consolidation into the RTH, but overall we're above the 9 and the 12, so trend is still on the upside. And on the 5-minute, you can see that it looks like we want to get a continuation pattern. There is going to be a naked cross here at 68, though. But let's take a look at it on the bigger picture. My main hypothesis, and it's actually, it's changing. On Friday, I was talking about the move back down into the balance in around the microcomposite. That's at the 2360. And we did get the move down yesterday, but, they found buyers down here again. And, here we are in the 7-day, microcomposite VPOC is at 67.75. We've got this little distribution, double distribution we were talking about. The CLVN that separates it is 63.75, so you want to pay attention to that. Of course, today we are going to open up outside of range, outside of value, so we could get some type of a drive early this morning. If we get above the 70, we could pop up into that 77, 78 area again and come into the Fed up here. I don't know if that's going to happen. I think they're probably more likely going to chop around in here, come down and challenge the range from the prior day. 63.75 is going to be an over-under line for me. Below it, I'm looking for a move back into the wick of yesterday and chopping around the 60 area. Key line in the sand above is going to be the 70.50. If we get above the 70.50, you might even want to wait until you get above the 71.25. 71.25 is the value area high for the longer time frame. The two value areas. The value area high for the 7-day is 70.25, but for the one that goes all the way back to the 21st of February, it's 71. So I would wait to get above the 71. In fact, I'm going to use 71 because once we're outside of this longer term value, you've got a higher probability of at least testing the lower side of the balance here at 75.25, if not up into the 77, 78. We still have that naked VPOC and naked close up there. So taking a look at overnight session. Overnight session is net long. All our inventory is all long from last night. We've got this LVN right here at 65.75, and I was talking about that a little bit earlier. That's going to be a key line if we get below for the overnight inventory, and probably give us a rotation down to test that over-under line at the 63. 63.75, because you're going to get some longs that are caught in the hole up here. So taking a look at the overnight levels, our overnight high is 70.25. Our overnight low is 62.50. So just above the VPOC and just below the value area high from yesterday. Then we've got that LVN at 65. We've got the range high at 65. That's obviously going to be a key area for us. And then, our over underline at 63. Going to move that down slightly. And the over-under line is simply where I'm thinking, short or long. I don't know why I do that all the time. Where I'm thinking more short versus more long. Anything above it, I'm still looking long, opportunities to get long into the overnight high and that naked close at 71.75. Our key line is going to be at the 71, just above the overnight high. And then, of course, we're targeting up here at the 78. Our daily ATR full session 20 period is running 15.10. So off of the low overnight, our upside daily ATR target doesn't change. It's just basically 2 ticks higher than it was yesterday, right sitting on top of the naked close and the range. The range high or range low. Oops. Neither. Sorry, that's my daily ATR. And then the upside, the downside daily ATR off of the high overnight. Our high overnight is 70.25. Our downside daily ATR target is at 55.25. So just above the prior day. Okay. So basically, levels, we're going to pay attention to the 59.50, targeting the 57.25, and a move down to test the daily downside, 54.75. Low. That's basically where our levels are going to be. It's going to be it's going to be a choppy open because of the FOMC. We're going to be opening up outside a range, so we have to look for an open test drive or an open drive as a possibility, and a push up into the overnight high. My gut is telling me, based on the overnight action, that they're likely to go and take out the overnight high regardless of what it does afterwards. But, there's no guarantee in anything. So I'm looking for an open auction out of range. My main hypothesis is a choppy open with a move down to test the range and the 62, 63 area, find responsive buyers, rotate up into the 67 and go sideways into the FOMC, and then based on the FOMC, all bets are off, which how high we go or how low we go. You can't prepare for that. You just have to react to it and trade the news based on a three-way pattern. My secondary hypothesis is an open auction out of range, a move up into the 70, 72 area, find responsive sellers, rotate us back down into the range, fight the range high, 65 to 63, and then come down and come into the Fed, in around that 60 level, and from there, whatever happens, happens. Now, typically, I would have had this as my main hypo versus hypo 1 versus hypo 2. I give both hypos equal weight. So column 1A and 1B. I still thought, my main weekly hypothesis was to come into the Fed in around that 59.60 area in balance, but the move that they made last night was pretty definitive, and now we're chopping around that the 7-day microcomposite VPOC around 67. So we might come into the Fed, in around here versus in around here. My third hypothesis is an open test drive or an open drive and a push up into the 78 and chop around in the 78 in the upper distribution, where we tried to hold value and come into the Fed up here. And then again, either push into the all-time high and equalize that high, or a major drop and a move back down into the 50s, lower 60 area. And then hypo 4 is an open auction out of range, failure to take out the naked close at 72, push down into the 62, fail, come down and come into the Fed down here somewhere in around the 51 to 52 area. But I think hypo 1 or hypo 2 is more likely, maybe hypo 3, depending on depending on how we see the action on the open. So those are my main hypotheses. Just taking a quick look at gold. Gold continues to come down and test the levels below 1200. Balance right now is up at the 1203.50, but it's pretty blunt here on the profile, and you can see we're getting some extreme whippiness the last 4 days. These tails and wicks, you can see a lot of selling still coming in when we get up into the 1207 area. 1205 to 1207, but still trying to find our balance and mature the auction here as we fight that 1200 level, which is a psychological level. Any weakness, the next move down, I'm looking for them to go down to the 95.70, and I'm not thinking that that's going to hold. I'm really looking at this 92 down here. And if the Fed does make us move, a bigger move today and a lower side target, which is not outside the realm of possibility, is all the way down here in the 1180 area there, or a move back up into the 1218.60, depending on how gold reacts to the news. We're going to have some reaction on the news at 10:30 with oil. Gold has a tendency to move on oil news as well, so it'll be interesting to see at the end of the day where we end up. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.